Guys, welcome back to another episode of Anything Basic, and we're back in it again with some talking head videos, a little bit of spotlight. Uh, we're going into it. We're going into some tough times here. The Fed said that it's going to keep interest rates high. It's going to beat down on Ethereum and everything. And as you can see right now from the prices right now up here on top of the Bitcoin is none of the coins are liking it. Dogecoin's down for 10 cents. Ethereum's down for 1,700. Bitcoin was hovering around 21,000 and it pulled down. It actually pulled down below the 20K right here. I don't know where they get their numbers from, but a lot of things are lower than that. And I guess that means Ethereum's on sale. They should probably get some right now. I still think Ethereum's gonna be pumped by your good old friend Berkshire halfway, and it's gonna go higher eventually as it merges. But in the meantime, we're talking about privacy coins and U.S. sanctions limiting privacy software use. Privacy use crypto firms. So basically, with the event that happened with Tornado Cash. Yeah, it's not going looking well for anything that has to do with privacy, because the USD can do it. The people who print the USD can do it, but you can't do it. Hey, buddy, what are you doing? Only the mafia can pull this stuff. Otherwise, we're gonna have to regulate. We're gonna have to regulate. Come in and regulate you. Anyways, earlier this month, the U.S. Treasury Department sanctioned a ban on Tornado Cash and crypto privacy tool. A crypto privacy tool that mixes funds of different users to hide the original source of crypto funds. The authority alleged the mixer firm for helping bad actors to launder more than $7 billion in digital assets since its initiation in 2019. As cryptocurrency has caught hype worldwide, it also raised some issues, e.g., money laundering, and bad actors using them due to their anonymous nature. Similarly, the space has altered and involved the government authorities to prevent illegal money transfers. As a result of which, law forces have been imposing sanctions on privacy tools that also disrupt other users' privacy. After authorities restricted Mixer from Tornado a few weeks ago, criticism appeared from crypto-oriented companies, with at least one legislator voicing support for the Mixer firm. They got somebody in their corner. The lawmaker urged these limits can harm the privacy of American users. Also, local users also utilize privacy tools to protect them online. Crypto mixer services circulate the crypto funds of a user from several crypto platforms and other users' assets pool to hide the transaction details and users involved with it. It was not the first mixing firm accused by U.S. law enforcement, as the authority has already implied sanctions on North Korean mixing company Blender.io in May. So question, let's start right there. How does a U.S. law enforcement reach out into North Korea, of all places, and say, hey, you can't do this? just putting that out there, just to see how far the long arm of this law reaches. Okay, going on. Officials claim they found the firm involved in helping North Korea hackers group Lazarus, who marked a $600 million heist targeting the Ronin Bridge network in March. Sanctions on Tornado Cash disrupted national security too. More and more people are turning to internet security tools. For many, Tor and VPNs are go-to privacy tools. But the crypto community has different tools that ultimately fulfill the same mission, assuring privacy. In line with the accusations of Foreign Asset Control Office of the U.S. Treasury, Tornado Cash opened a way for hackers to launder stolen funds of more than $96 million. According to the official statement, these funds belong to the Nomad crypto heist of August and the Harmony blockchain theft that happened in June, citing the imposing sanctions, and a non-profit crypto advocate platform, Coin Center, argued that law forces have overstepped their legal power, paving the way to violate constitutional rights due to due process and free speech. Congressman Tom Emmer, who received $50,000 in contributions from a blockchain association this year, their lobbying, asked Treasury Secretary Janet Yellen this week by sending a note to issue a rationale for Teneo Cash. He further added that sanctions had disrupted national security and impacted the right to privacy for every American citizen. Another major crypto project, Tether, also voiced support for Tornado and refused to freeze Tornado accounts on its networks, saying that it intends to keep them. Yay. They're probably one of the biggest users, to be honest with you. On the other hand, the Treasury representative stated that the agency aims to disrupt only criminal behavior and will use its sanctioned authority to prevent the financial system from illicit operations such as money laundering and cyber thefts. Supporting statements for Teneo Cash appeared after Dutch authorities arrested firm's developer in August. After a couple of days, the U.S. imposed sanctions accusing it of facilitating money launderers. Now, reading all that, you're probably like, one, how far does like I asked earlier, how far does the U.S. reach of their law actually reach? And two, why am I looking this up? Why am I looking this up? Because they forgot to put this on the front page of CoinGecko or any exchange, but for some reason, PIVX has just exploded in price. And I went everywhere to figure out why in the last 10 hours or so PIVX had went from, what was it, $16 to $32. It doubled in price. And this is all I can find, is that somebody doesn't want privacy to happen. Somebody doesn't want the good old private shielded transactions to happen. And I know PIVX is a proof of stake coin, and you know how I feel about proof of stake coins. I don't believe proof of stake is the way to go, but hey, it's a privacy currency, so I can't completely sideline it and just keep it out of the loop. I mean, if it's furthering privacy on what we do, what a citizen does with their money, then I am gotta look into it at least and see how it's doing. And right now, with the markets burning, basically, PIVX is doing very, very well. For, once again, reasons I don't know. I'm gonna go ahead and look at this. And as you see, an exchange somewhere, most likely, has pulled this funding. And everything in unison, as usual, following Bitcoin and Ethereum, has fell through the ground. The whole market's down, almost on that $1 trillion line. It's market's down 3.1%, and everything's just fell to the ground. Everything's fell to the ground. It's been falling. I guess the crypto market did not take Jerome Powell's news too well. But also the stock market. The stock market is down way worse than the crypto market. I believe it was over 1 trillion. And the stock market is down as well. So things are not looking good anywhere. And I expect more bleeding to happen. Except, of course, at PIVX. Except, of course, PIVX is the only thing that's actually pumping. And once again, we're not going to see that on the front page. We're not going to see. They're going to talk about Dogechain, Emovos. I never heard these. Emovos, GMX. I heard Cosmo. Cosmos, but not Cosmo Hub. But all these just banker coins, basically, that these exchange coins, these high trade coins, these algorithm coins, this is all they're going to talk about ever. They're going to talk about the privacy coins because, well, you're going to get regulated. So, one more bit of article. One more article to cap this off. And we probably already knew this, but report 51% of Bitcoin's trading volume is fake. So, as you've seen right here, with how the markets all pull down at the same time, there's definitely a bot behind it. There's a bot, there's something on a large exchange that just does everything all at once, and it just basically got mad and flipped the table right now. In brief, Forbes reported that Bitcoin transaction volume on June 14th was 128 billion, not 262 billion. Over 90% of Bitcoin liquidity is against Tether's USD or the US dollar itself. Binance controls 27% of all Bitcoin trades and a lot of its mining as well. Surprise. Top crypto exchanges without KYC reading out. Okay, that's just propaganda and marketing. Bitcoin's trading volume is significantly lower than what is reported according to Forbes' latest study of 157 exchanges. Why do we need this many exchanges? Just question. According to the report, Bitcoin trading volume on July 14th was 128 billion, far lower than the total of 262 billion reported by all exchanges. This shows that around 51% of Bitcoin trading activities were fake or non-economic. Tether's role, according to Forbes, Tether plays a significant role in spot Bitcoin trades, as most of the trades come from stablecoins. However, fiat currencies like the US dollar, Japanese yen, and South Korean won are also involved in a high percentage of trades. Overall, 90% of Bitcoin's liquidity is against the USDT stablecoin or the US dollar itself. Also, is also a huge non-dollar demand coming from Europe, Japan, South Korea, and Turkey. It also discovered that most of Bitcoin trades come from Bitcoin perpetually trading, by spot trading and futures trading. I thought we weren't getting futures. I thought there was a big lawsuit against that. Anyways, Binance, FTX, and OKX top exchanges trading volume. The report grouped exchanges into three categories based on the differences in their self-reported volume versus their actual volume. Per the report, the top three exchanges by trading volume are Binance, FTX, and OKX. Others including Bybit, BitGet, MEXC Global, KuCoin, BingX, Crypto.com, and Huobi Global. Notably, on FTX, OKX, and Crypto.com are in Group 1, i.e. exchanges with differences of 0 to 25% between their real trading volume and reported Bitcoin trading activity. The rest come in Group 2, composed of exchanges with a volume discount of 26 through 79. Group 3 consists of mostly small and unregulated exchanges, some of which claim clearly bogus Bitcoin trading volume. For instance, BitCoke reported a trading volume of 14% when it has less than 10,000 monthly visitors, and more than half of them were from Argentina. Figures from exchanges with minimal regulatory oversight dubious. The report identified that one of the major problems with fake or non-economic trading volumes comes from exchanges that operate with minimal regulatory oversight, affecting their figures' credibility. These exchanges, which notably include Binance, Bybit, MEXC Global, reported trading volumes of 217 billion, but their actual volume was 89 billion. There you go, Binance again. Why these exchanges report false figures? According to the Forbes report, some traders engage in wash trading to paint a false picture of demand and the rising popularity of their tokens. The report stated that the exchange benefit from these non-economic tradings as it allows them to appear to have more volume than they actually do, potentially encouraging more legitimate trading. And that's the article. I'm not even going to try to pronounce this guy's name. and that's your article creator. So what do you guys think? What do you guys think? Have you always known that the trading volume was rigged, algorithmic? There were some bots making it look like there was more than it actually was. Or have you not known? This is just news to you. Do you think it's a good time to trade into Ethereum? Do you think PIVX? Let me put this up again, just because it's so awesome. Do you think PIVX is the way to go? Do you think it's a good investment, even if it is proof of stake? Do you think it's a good investment based on this little diversion, as opposed to what Bitcoin and Ethereum is doing? Let me let me know. Let me know in the comments what you guys think, and I will see you again soon.